In this video, we'll be analyzing the earnings of Shopify, a global online platform that provides e-commerce solutions to millions of businesses in 175 countries and growing. Shopify is trading on the stock market, and after the hyper-growth that Shopify stock experienced during the COVID-19 pandemic, when the demand for e-commerce skyrocketed all over the world, came the slowdown. So now Shopify's management must find new ways to grow revenue, which we will unveil in this video. As a public company, Shopify releases its quarterly and annual earnings. So we will look at Shopify's financial statements in its earnings report to understand how Shopify makes money from different sources, how much it makes, and what the future outlook is for the company. So whenever Shopify releases earnings, you will understand them like a pro. Looking at Shopify's income statement under revenue, we find two ways Shopify makes money. The first one is monthly subscriptions that merchants, businesses on Shopify, pay to host their e-commerce stores on Shopify platform. For example, when Netflix, a video streaming company, decided to open an online store to sell merchandise like t-shirts, it did not bother building it from scratch. Instead, it used the subscription-based Shopify platform and within days had the online store up and running. And here we see different Shopify subscription plans and prices, mainly depending on how many employees of a merchant will be working in the online store. So how much money does Shopify make with subscriptions? Looking at Shopify's income statement, we see that in the first quarter of 2024, Shopify made $511 million in subscription revenue, which is a 34% increase in comparison to the same quarter of the previous year. The increase happened, as we will see later, thanks to Shopify aggressively investing in marketing to attract new merchants and retain the existing merchants on the platform. And below, we see the second source of revenue, a much larger source of $1,350 million that came from merchant solutions, which also shows an increase compared to the same quarter of the previous year. While it's clear what monthly subscriptions are, what are merchant solutions? They represent a wide range of add-on services that Shopify sells to merchants, in addition to hosting their websites, to help them smoothly operate their e-commerce stores. Merchant solutions range from payment processing options, to shipping tools, to advertising campaigns for merchants' customers, to business loans, rewards programs, and much more. This way, Shopify is making sure that merchants receive a complete package of e-commerce tools on the platform and don't need to look for them on competing platforms like Amazon. So by offering a wide range of merchant solutions, Shopify achieves two purposes: retention of merchants on Shopify platform and additional revenue from selling services to them. To that effect, Shopify App Store offers thousands of apps to merchants, mostly created by third-party developers. When merchants use these apps, Shopify also makes money in referral fees collected from developers when it recommends their apps to merchants. I hope you're finding this video useful and informative. If so, please click like and subscribe to the channel to see more videos like this one. One change that Shopify made in merchant solutions post-pandemic in order to further grow revenue is supporting merchants' omni-channel operations, meaning not only offering e-commerce tools, but also supporting their physical and pop-up stores, recognizing that nowadays many retailers operate both online and traditional physical stores at the same time. For example, Shopify allows for integration of transactions from e-commerce and physical stores in overall analytics it provides to a merchant. So the increase of merchant solutions revenue, as we have seen on the income statement, is the result of Shopify's efforts to expand the range of services to a growing number of merchants. We see that the total revenue Shopify generated in the first quarter of 2024 from both subscriptions and merchant solutions was $1,861 million, which is a 23% increase compared to the previous year. Moving down the income statement, we see $904 million deducted from sales as cost of revenue, which mainly includes the cost of technology infrastructure and development of the Shopify platform, related payroll expense, and credit card fees on payment transactions occurring on the platform. Moving further down, we see the major operating expenses of Shopify. We find that Shopify spent $361 million, which is over 19% of its sales, on marketing to attract more merchants to its platform, which is clearly paying off as we have seen a significant increase in subscription revenue above. Shopify also spent $335 million, or 18% of its sales, on research and development to constantly improve its technology and introduce new services to merchants, which is paying off as well by increasing numbers of overall revenue from both subscriptions and merchant solutions divisions. Despite major expenses, we see that Shopify had an operating profit this quarter of $86 million compared to a loss it experienced the same quarter a year before. This is a positive sign, but unfortunately, as we continue going down, we see that Shopify ended up with a net loss of $273 million on its bottom line. This resulted in negative earnings per share, calculated by net income divided by the number of shares, which does not look good compared to positive earnings per share of last year. This is why the stock tanked as soon as the earnings were released. It appears that the cause of the net loss on the income statement is the other expense line, showing negative $342 million. To find out what that other income is, we need to look at Shopify's annual report, the 10K. And we see here that other income consists mainly of interest earned on Shopify's investments, any gains associated with foreign currency exchange, and other income not related to Shopify's operations. So in order to correctly evaluate Shopify's performance, operating income or loss is a much better indicator. But even though the operating income is positive this quarter, there are no guarantees that Shopify will be able to sustain operating profits quarter after quarter and year after year, which is true for many young technology companies. In the annual report, Shopify admits, we have incurred net losses in the past and we may be unable to maintain profitability in the future. They explain it by increased investments in marketing and research and development, and they state that they plan to further increase these expenses in the future to grow Shopify. For a tech company in a fast-growing e-commerce space, this makes sense. Shopify is aggressively investing in the long term, trying to firmly establish a leading position for years to come, even if it comes at the expense of short-term profits. Going forward, it looks like Shopify will grow revenue in 3 ways. It will continue geographic expansion, attracting more and more merchants all over the world to its platform. It will also continue to grow the number of services to these merchants, and it will further expand to support merchants not only in e-commerce, but also in operating their physical stores and providing tools to integrate both in omni-channel.